Nigeria's inflation rate increases to 11.37%. That was in January, and in February it dropped to 11.31%, a 0.06 percent point lower than the rate recorded in January. Now, the consumer price index dropped to 11.25% in the month of March. Now, this shows a third decline in 2019, as headline reversed in April 2019 when the CPI increased to 11.37%. As you can see, for the month of April, 11.37% was what we have. Now, the upward trend was sustained in the month of May as the consumer price index moved up by 3 points and now stands at 11.40%. That's what we have in May, from 11.37% for the month of April. This is according to the National Bureau of Statistics. Now, some of the issues causing inflation generally includes electricity, that's tariffs, taxes, wages, food prices, and of course, insecurity, which has affected food prices. Some analysts say the current inflation rate may cause uncertainty for Nigerian market and affect the country's exchange rate. They want the government to improve productivity and create wealth for the people beyond inflation rate. To discuss this, I have in the studio Head Research at AfriInvest West Africa, Robert Omotunde, is here live. And I'm also have joining me in the show as we move on, our investment and economic development analyst, Ogbonna Okuku. He'll be joining us from Abuja when we get signals from there. But let me start with Robert. Robert is here. Robert, it's great to have you join us on the show.
Thank you.
Let's start with this figure. Were you expecting this 11.40 what we have at this moment? What were you expecting from your figures?
Well, it's not surprising. It's not surprising again. I mean, you alluded to what we've seen in terms of trend since the beginning of the year. If you recall, at about January of 2017, that was shortly after we came out of the various issues. There were shocks to macroeconomic stability in 2016. I think it was in January of 2017 that we see the peak in terms of inflation rate, to as high as 18.9%, before we now started seeing gradual downward trajectory in inflation. I think by the January of 2018, it has dropped to as low as 15%, and January of 2019, we've seen inflation rate at about 11.37%, which you earlier mentioned in your introduction. And what we've seen now from January is gradual creeping up of inflation, from 11.37%. You can see that it's a little bit more stable. From 11.37%, it has moderated to 11.25, and the last reported, which was April inflation, was around 11.37 percent before we saw the May inflation at 11.40%, which shows just 3 basis point increase. Of course, because of other pressures we're seeing majorly from food. So when you look at the consumer price index basket, food accounts for up to 50% of that basket. And you're seeing price pressures, from food, and this is feeding into the headline inflation, which again is impacting on what you see. I mean, of course, on the streets, those on the streets can feel the impact as well, because again, when you look at what we call COICOP, which is the classification of individual consumption by purpose, which measures broadly the consumer price index, you'll see that it is majorly skewed towards food. Again, you can analyze this by the quantum or the level of income of people. Most people will still spend most of their income on food, again, which is why we say Nigeria is the poverty capital of the world. So it's not surprising at all that we are seeing inflation at 11.40%. But again, what is the impact on investment climate? What is the impact on exchange rate? What is the impact on growth figures? These are other issues that we can talk about.
Indeed, that's where we should go from here. Now, before we go to the impact, now we've seen it at 3.7, 11.31, 11.25, 11.37, and 11.40. Now, the central bank has maintained that this are part of the reasons why the monetary rates, they've been holding on to it, and a little bit of tweaking that was a few months ago. Now, what are your expectations? How do you see the central bank reacting to this figure, maybe in their next meeting? Let's project before we now look at some fundamentals affecting these figures.
Well, I think that the central bank is already comfortable with the level of inflation that we have. Remember, when monetary policy targets, or when monetary policy is trying to be proactive, or reactive to price pressures, they don't look at the headline inflation, which is what we are talking about today, right? Most times, the monetary policy is looking at the core inflation, which is the headline inflation less all the volatile items. So in Nigeria today, because of regulation of prices, the core items are measured by your headline inflation less the farm produce. In other countries, you will see the exclusion of energy prices. That is, you're trying to remove, the noise, the volatilities, things that monetary policy cannot run after. They can't target volatile prices, They can only target prices, that are predictable, which is why we measure core inflation. And if you look at core inflation from the beginning of September of 2018, we've seen it at consistent single digits. It started from a single digit of 9.8, and as you're speaking, the core inflation is at a comfortable level. So when central bank or monetary policy is looking at what to target, they are seeing a core inflation at a single digit, and they are seeing return on investment, at the minimum. MPR is at 13.5%. And when you look at market rates, short-term interest rate, are still hovering between 11 and 12%. But when you look at yield on long-term, investment, yields on bonds, sovereign bonds, for example, you're seeing yields. For example, when you look at tenors that are above, 1 year term to maturity, you're seeing yields at above 14%. So monetary policy can be comfortable with this. Now, the other angle to it is how much of this implies price pressures within the system. As at the latest data that we have from the central bank, money growth, because when monetary policy is trying to tighten or ease, what you are really targeting is to control the growth of money supply. And when you look at money supply year on year, between April 2019 compared to 2018, you have seen an increase, I think about 12.6 or 12.8% increase in money growth, So the point will be, would you say that the monetary policy is actually tightening while you are seeing growth in money supply? Again, if you must grow your economy, there is a tolerable level of inflation that is expected for the economy to even grow at all. So inflation levels, of course, have implications, very wide-ranging implications, not just for investment, but also for growth. So I think that when the next MPC is sitting, they will be looking at the stability that we have seen in core inflation. Of course, we know that headline inflation has been majorly hampered by food prices, which constitute a larger proportion of that basket. So how much more should you tighten in order to control headline inflation, knowing that further tightening has implication on costs, cost of doing business, cost of operations, part of that inflation figures is the imported element of it. The more you tighten, the more implication it has on prices, and this will further hurt the average consumer, of which case you can even see a further tightening leading to higher food prices, which then takes the headline inflation higher.
Okay, let me get the view of an economic and investment development expert who's also joining us live from our Abuja studio, Ugbonaya Ukuku. Now, thank you very much for joining us, Mr. Ukuku. Now, let's get your direct reaction first. 11.40%. A Nigerian on the streets wants to know how this would impact putting food on his table. That is what he wants to hear from you. Tell us how this impacts on Nigerians. Inflation rate at 11.40% at this time.
Yeah, pretty much. It's something. It's actually expected, because we're already at what I call, when we have a not favorable agroclimate, because if you look at it, it's actually the food prices that's actually that is having the heat on, the inflation is hitting on. So when you have that, because right now everybody is planting and the rains have come, so basically food becomes expensive at this point in time. So for an average person, we need to just understand that because we have not improved our off-season cultivation, our crops at this time will become expensive. So this will also mean that as far as growing the economy is concerned, we're still talking about the monetary policy end. We have to also look at the fiscal policy end, because at the time, as soon as we hit the ground running with the administration starting, putting together its cabinet, those who are going to manage the economy, you will see an influx of ideas and new investments into the economy. So that will also help expand the economy and also help drive the cost of production downwards. Because, I mean, if you invest further in infrastructure, that will also help, improve the efficiency or the ease of moving goods and services from one point to another. And then if you listen to what the president said concerning, supporting the feeder roads to farms in his democracy speech, you will see that if there are larger investments put in at that local level, it will definitely affect the entire production cost for every business in Nigeria. Then again, we'll have to look at power. Power is an area that we must continue to invest in, so that if peradventure that the investment begins to speak, you will see it will affect the common man on the street, because cost of production will be driven downwards.
Okay, let me follow up to that before I come back to Lagos studio. Now, I'd like you to also react to some of the source issues that many know that causes high inflation rate: electricity, tariffs, taxes, and the expected minimum wage implementation of that 30,000 minimum wage. Many say that even before it's been implemented, already prices of foodstuffs and other things are on the high side. I don't know what you say about this.
Yeah, okay, let me start from, power, the electricity tariff. Now, it's a complete cycle of activities that happen in different areas to give you the power that you see in your house or the power that you see in your industry. For example, for you to do power in Nigeria, you must, as a private person, you must interface with at least 7 different agencies. Now, these are things that we must streamline. I'll give you an example. If you want to generate power, that means you need to get to any ROC to get a license. For you to get that license, you must do your evacuation study, which TCN must approve, and then you must be able to do your environmental impact assessment. Then again, this power has to be located in a location. So that means you must have had an interface with a state governor where you are going to acquire land to put this plant. Then you must, the fifth organization is you have to fire if it's gas powered, you have to fire the turbine with gas. So that means you must have an interface with NNPC, that's the Nigerian gas company. So and from there, because this power also, when you produce this power, is not going to put on the shelf, you have to also go to NBET, that's Nigerian Bulk Electricity Trading Company. So this is everything that you must go through as an investor for you to be able to to produce a megawatt of power in Nigeria. So these are things also that have come out of legislation. So you can't have this thing it's not bread and butter. So these are work that has to be done for us to get results. So for us to now have what I call a plug and play approach to power production in Nigeria, that is when you begin to see significant results when it comes to power, which will also help, like I said earlier, to drive the cost of production down. So there's really nothing anybody can do about it as it is now. Right. Although the present administration have also looked at it and they say let them do smaller off-grid power projects, which have actually paid off in some locations like Ariaria Market and some other places in Lagos. So if we do that, if we continue to take that approach, to take this kind of power approach to smallholder farmers, those who will need to preserve, certain products, then you see there will be growth in the economy.
All right, hold your thoughts. Let me ask Robert to also react to this, because Robert, now the composite food index rose 13.79%. That's in May 2019. Now compared to 13.70 in April 2019. I like your reaction to this. Talking about food now. What do you think is responsible for this?
I think the MBS report comprehensively articulated some of the pressure points, that accounted for that increase. You will notice that food inflation still continues to be the major driver of price pressures. And I think Ogbunaya, alluded to that. That's the guest in Abuja when he was, talking about some of the pressure points that we've seen. The fact that everybody is planting, and then we are seeing not so much of. Food prices are generally expensive now, and you can attest to that. When you look at your cereals, your tubers, to buy a tuber of yam, you know how much it costs in Lagos now. Again, these are all of the pressure points that are counted for the pressure points that we experience in terms of food prices. And like we said, if food accounts for 50%, again, look at core inflation is at a single digit. You're seeing the headline inflation at 11.40%, but food inflation is still as high as 13.79% again, which is, showing the, the impact or the much of impact that the food inflation has, on the headline inflation. So what we are saying is as a result of some of the components of the food basket, in the food index, food components of the CPI that has accounted for the much of growth that we experience in terms of food inflation.
A follow-up to that is now suggestions have been coming up how we could make the economy and environment more conducive. As someone talking about tax waivers for startups, do you see that also as a way of getting it right, Robert? Before I cross to Abuja,
again, tax policies have to be re-evaluated. There have been a lot of advocacy. As much as the government is trying to diversify its revenue base, we must understand that this is an economy, for example, that is challenged. And to the extent that we want to support small, medium-scale businesses to thrive, we must be able to give some tax incentives with the understanding that when businesses grow, when businesses are at their, fruiter stages, they tend, at that level, they are very fragile, and any policies that's untoward can actually kill those SMEs or those small businesses. But if you allow them to grow, and you give them some tax rebates or tax allowances to grow, the implication is that they grow bigger, and then you can tax them when they are bigger, and government wins at the end of the day. So we can't overflog that issue. Government can give some allowances. The angle that I wouldn't like to toe, is the form of sort of subsidy that we clamor for in every aspect of our economic life, and it is killing this economy. Subsidies are killing Nigerian economy, and the earlier we realize that we do not have the leeway in terms of resources to be able to continue to drive subsidies in every aspect of our life, the better for the economy. We need real capital to grow this economy, and for as long as we are socialistic in our ways of, allocating economic resources, then we are not going to attract the much of capital that we need to grow the Nigerian economy.
Ogbunaya Okuku, let me ask you the same question. Robert just touched on the fact that we need capital to grow this economy. And one way of getting capital is also by attracting foreign investments. Tell us, how well are we doing that, or how better can we do to get more money, more funds? We need funds to actually grow this economy.
Okay, let me put it this way. There are four motivators, four major things that motivate investors into any environment or any economy. One, you have to look at natural resources. Now, natural resources like oil, like the solid minerals that we have, those ones automatically just have a way of attracting investment. Two, you need to look at the market size. Now, market size, please don't get it wrong. Market size is not population, because you can have 2 billion people in Nigeria. If they don't have capacity to, the power to purchase, they're as good as nothing. So please, that should also be noted. Number three is efficiency in the system. Now, efficiency in the system talks about the tax regime, the kind of infrastructure you have, how easy it is to get licenses and all of that. So these are the things that must be looked into for you to attract investment. And then the last thing is I call strategic asset acquisition. I give you a very simple example. Without Obajada, I don't think Dangote would have been the richest man in the whole world. Please, anybody can prove me wrong. That's a strategic asset which he invested in, and today he has become where he has become. I'll give you another simple example. A company like Indorama that bought over LMA Petrochemicals in 2005, 10 years later, the company was now worth $15 billion. Those are the kind of things we call strategic asset acquisition. So these are the things, when I listed these 4 things so that you will know that for you to attract investment in any environment, you must take a critical look at these 4 things I just mentioned. So, but the most critical is actually the institutional framework of your nation, which is the efficiency in the system. Let's look at a country like Singapore. Singapore, without a single drop of hydrocarbon, was able to attract investment worth over $90 billion into Jurong Island. Why? Because there was an efficiency in the system. They had a plug-and-play approach to attract investment. They put all the infrastructure that every investor that wants to do, refinery, anything hydrocarbon related will want to do. So as soon as you come in with your briefcase with your funds, you will see where you're going to, the area where you're going to play and participate. And you start participating and you start making money. So let's also, the tax regime, which I mentioned earlier, yes, there's already what we call pioneer status that exists in Nigeria. You are entitled to 3 years to 5 years tax holiday if you're investing in a particular sector, like agriculture, the gas. There's so much. I think there are about over 70 areas that if you're investing in, you get your tax holiday. It's just that a lot of Nigerians need to also read more, go to the Nigerian Investment Promotion Commission website so that they can read and see those who are eligible to get those tax holidays. They are there. We already have that support system.
All right, investment and economic development expert Ogbonaya Okuku, thank you very much for joining us from our Abuja studios and sharing your thoughts on this very important topic. I still have Robert here. Robert, on a final note, let's say something. What do we expect from government? Many say they are waiting for the president to come up with the list, ministers, economic team. They want us to move on, kickstart this economy and start moving, running just like yesterday. What are you thinking?
We are too late. We need to get on with ourselves and propel this economy to the path of growth. So my advice to the president is, as quickly as he can come up with his cabinet members, he needs to form his team very quickly. Nigeria's economy needs to be recalibrated, and we need people of might, we need people of substance to drive this effort. So we can't wait for the team. The economic team has to be put in place as quickly as we can, so that we can move as fast as we can and live to the potential of our economy.
Robert Omotunde, the head research Afri-Invest West Africa. Thank you very much for your time on the show. It's always nice having you. Well, before we go, let's tell you that the figures in, the market is down 0.39%. Nestle, International Breweries, the Como Oil, down on the loser streak. We're bringing you up to speed with all of that in the subsequent bulletins. As market editor Efionge Cup will be there to bring us up to speed with trading patterns and activities for the day. But on that note, that will round up today's show. Thank you very much for watching. Let's do this again, same time.